Hey everyone, before we dive in, here's something really cool. You're listening to an episode created almost entirely by AI. From the script to the voice, this is part of the AI Takeover series by Blockchain DXB, where we explore what's possible when humans hand over the mic to machines. There's little to no human involvement, and that's what makes this episode so powerful. Welcome to the future of content creation. Let's get into it. This episode is powered by Amana, the region's first and fastest-growing regulated all-in-one trading and investing app. Whether you're looking to invest in U.S. stocks like Apple or Tesla, or MENA giants like Adinoc or CertiK, Amana puts the financial market at your fingertips. You also get access to gold, foreign exchange, ETFs, futures, and commodities. With over 375 assets to choose from, they've got the largest crypto selection in the region. And listen, guys, if you want to build long-term wealth without thinking about it every day and want to automate your investing, just set your monthly budget, choose your preferred categories, and let Amana do the rest. No fees, no lockups, and 100% customizable. Even better, funding your account is frictionless, and funding your account is easier than ever. You can fund your account with Apple Pay, Google Pay, credit cards, instant bank deposits, and even your crypto wallet. No friction, no hassle. And if you get stuck, Amana offers 24/6 real human customer support and personalized sales assistance. Because you're part of the Blockchain DXB community, you get an exclusive offer. Register with the code BlockchainDXB and make at least one trade to receive a $100 trading bonus credited to your account the following month. So what are you waiting for? Download the Amana app now. The link and code are in the show notes. Next up, Blockchain DXB is proud to be the official media partner for one of the biggest blockchain events of the year, the Blockchain Futurist Conference. For the first time ever, North America's leading crypto event is heading to the United States, taking place at the iconic Guitar Hotel at Hard Rock in Hollywood, Florida. Alongside it is ETH Women, happening simultaneously. Expect multi-stage panels, NFT galleries, DeFi showcases, tech demos, metaverse experiences, and more, all under one roof. It's where the smartest minds in blockchain, crypto, and AI will converge. Get 25% off tickets by using the code DXB25. And yes, I'll be there with exclusive live coverage, behind-the-scenes interviews, and spotlight features on groundbreaking projects. Mark your calendars, November 5th and 6th, 2025. Visit futuristconference.com and use code DXB25. Link is in the show notes. Next up, Blockchain DXB has two more interesting partnership news to announce. First up, with Future Blockchain Summit and Fintech Surge 2025. Blockchain DXB is an official media partner of Future Blockchain Summit and Fintech Surge 2025. Future Blockchain Summit is one of the biggest and oldest blockchain summit taking place in Dubai, going back to almost a decade, 2017 to be precise. The event takes place between October 12th to 15th at Dubai Harbour. This is where blockchain meets fintech to redefine the future of finance. 250 plus world-class speakers, 1,200 plus investors, live demos, product launches, and the exclusive invite-only GITEX Digital Assets Forum, all under one roof. From Web3 pioneers to fintech leaders shaping payments, banking, insurtech, AI, and DeFi, this event brings the entire ecosystem together. Startups, this is your launchpad. Get in front of top VCs, accelerators, and industry leaders. For blockchain and fintech companies, this is where connections turn into partnerships and dreams turn into exits. Register today at futureblockchainsummit.com. Don't just watch the future unfold, own your space in it. Remember, Future Blockchain Summit and Fintech Surge 2025. The registration link is in the show notes below, and see you at Dubai Harbour. Second partnership news kicking off from today is with the leading Bitcoin event organizers on this planet. And this year, Bitcoin Asia is taking things to another level. Bitcoin Asia are hosting a massive gathering this August in Hong Kong, and Blockchain DXB is proud to be an official media partner of Bitcoin Asia 2025. Taking place this August in Hong Kong, Bitcoin Asia is the region's premier Bitcoin gathering, where builders, investors, and innovators meet. It's really an honor for Blockchain DXB to be associated with Bitcoin Asia. Now at this event, expect powerful keynotes, bold conversations, and a headlining session with none other than Eric Trump. He will be sharing his vision for Bitcoin's long-term potential, its role in global finance, and Asia's massive impact on adoption, and a lot more. So listen up, guys. From infrastructure to regulation, privacy tools to lightning development, Bitcoin Asia connects global Bitcoin communities and drives innovation across cultures and markets. And as part of this partnership, you can register for the Bitcoin Asia using the code DXB. All the detail are in the show notes below. If Bitcoin's in your blood, this is your event. So, register today at asia.btc and don't forget to use code DXB for 10% off your tickets. Bitcoin Asia 2025, Hong Kong is calling. Be part of the future of Bitcoin. Next up, Advanced Media is the largest distributor of professional video, photography, cinema, and broadcast accessories in the Middle East. They represent over 100 major brands, including DJI, Hasselblad, Red, and Rode. The mic I'm using to record this? Sponsored by Advanced Media. But what really sets them apart is their commitment to purpose. People, planet, and prosperity. That's not just branding, it's their actual business model. They've partnered with SAE Institute in Dubai to offer scholarships to students pursuing a bachelor's degree in filmmaking, each worth AED 50,000. They also run regular workshops, training programs, and tech showcases across the region. For more info, visit amt.t, that's amt.tv. Finally, let's talk about something every crypto investor should take seriously: security. And that's where Ledger comes in. Ledger is one of the most trusted names in crypto security. Their hardware wallets, like the Nano S Plus and Nano X, keep your assets safe by storing your private keys offline. That means you're protected against hacks, malware, and phishing attempts that can compromise online wallets. The company is headquartered in Paris and is constantly innovating. Their team works with world-class security researchers and regularly tests their own products for vulnerabilities. It's why Ledger wallets are used by millions around the world. Using a hardware wallet isn't just smart, it's essential. If you're serious about crypto, it's time to stop relying on centralized exchanges or browser wallets. Click the link in the show notes to order your Ledger wallet and support this podcast at the same time.
Okay, let's unpack this. The crypto world is, well, it's a whirlwind, isn't it? Innovation, regulation, sometimes just confusion.
Definitely.
Today, our deep dive gives us a fascinating snapshot. We're looking at just one moment in time, September 8th, 2025. And while Bitcoin's price might look kind of steady on the surface, underneath, there's just a huge amount of interconnected action going on.
Yeah, there really is.
We've got a stack of fresh insights here, giving us a real pulse check on global crypto trends, big market moves, and what's bubbling up with regulators.
And what's truly fascinating, I think, is how these things that seem separate, they actually weave together.
Right.
We're looking at a day where Bitcoin's stability hides some pretty intense activity. You've got ETF flows moving in opposite directions, high-stakes economic summits, some really interesting institutional plays.
So the plan is to connect those dots.
Exactly. Connect the dots for you so you can understand not just what's happening, but more importantly, why it matters.
Yeah.
And what the bigger picture means for, how you understand this whole evolving space.
Perfect. So our mission today: cut through the noise. We're pinpointing the critical shifts, maybe uncovering some surprising facts along the way, and helping you grasp the wider significance of all this.
That covers a lot of ground.
It really does. From huge financial decisions on the global stage, stuff that impacts whole economies, right down to individual crypto wallets suddenly getting blacklisted. It's a packed agenda.
Yeah.
Let's jump in.
Let's do it.
One of the most interesting signals we're seeing today, it actually comes from the ETF market. And it seems contradictory at first.
How so?
Well, like you said, the overall Bitcoin price is pretty flat, but we're seeing these really contrasting signals in the ETF world. What's the story there? What's this divergence telling us about how investors are feeling right now?
Yeah, that's a crucial observation. It really is. On one side, you've got Bitcoin ETFs seeing pretty solid positive inflows. about $28.7 million just in the last 24 hours.
Okay, so still some confidence there.
Exactly. It suggests this sustained underlying confidence. Institutions are still seeing Bitcoin as, a viable long-term digital gold kind of play. But here's the contrast. Ethereum ETFs, they've seen a staggering outflow. $446.7 million flowing out in the same period.
Wow, okay. That's a huge difference. What's behind that?
It really makes you wonder, doesn't it? Why such a dramatic difference, this kind of divergence? It often signals a flight to perceived safety within the digital asset space itself.
So Bitcoin feels safer than Ethereum right now to these big players.
It seems that way. Investors, especially the institutional ones, might be favoring Bitcoin's more established narrative. Maybe they're a bit cautious about Ethereum because of ongoing regulatory questions, or perhaps they're anticipating those complex network upgrades are taking longer than expected.
Right.
It's a clear sign of capital being strategically moved between the two giants.
Okay, that makes sense. A cautious institutional preference. And speaking of investor confidence, or maybe lack thereof, we can't ignore the geopolitics today.
The BRICS summit.
Exactly. The BRICS nations are holding this virtual summit specifically to discuss how to tackle President Trump's tariffs. How does that connect back to crypto?
Well, it directly hits investor confidence, right?
Yeah.
Because global trade policies, they always ripple through financial markets. They influence risk appetite.
Okay.
And our sources suggest the BRICS nations actually have, well, pretty limited room to negotiate with Trump here.
Why is that?
Mainly because the U.S. has a big trade deficit with these countries. Plus, past tariffs have already brought in supposedly over $18 trillion in investments back to the U.S., factories, jobs. It puts the U.S. in a strong position.
So not much leverage for BRICS.
Not really. And crucially, they currently lack a ready alternative payment plan or, a CBDC that isn't backed by the U.S. dollar.
Which kind of reinforces the dollar's position, ironically.
Paradoxically, yes. It makes any crypto alternative seem like a higher risk play, at least in the short term, when stability is shaky. So the outcome of this summit, whatever it ends up being, it's going to impact crypto prices and sentiment. Global power shifts always influence whether people run towards or away from riskier assets.
So if they're struggling to find a non-dollar option, does that actually make crypto seem less appealing as a hedge right now, given its own volatility?
That's a great point. It highlights that crypto paradox, doesn't it?
Yeah.
It's seen as an alternative, but it's still super sensitive to traditional market stability.
Okay. So with these big global talks happening, what else should we be watching for this week on the economic front? What could really move the crypto market?
Right. Looking ahead, we've got two massive data points coming up, really highly anticipated. First, September 11th, we get the CPI data. Inflation numbers.
Always a big one.
Always. And historically, well, at least for the last 6 months since Trump's tariffs kicked in, inflation has consistently gone down.
Yeah.
So if that trend holds, it could seriously boost investor confidence, maybe more ETF inflows, positive for crypto prices. Lower inflation usually means a healthier economy, more appetite for risk.
Okay, CPI on the 11th. What's the second one?
Second, later in the month, September 17th, Federal Judge Jerome Powell makes the call on interest rates.
Ah, the Fed decision.
Yep. And based on what he said at his Jackson speech, there's a pretty strong feeling he might actually reduce them.
Lower rates, what would that mean?
Well, stepping back for a sec, lower interest rates usually signal a better environment for risk assets, like cryptocurrencies. Makes them look more attractive to investors who are looking for higher returns than, just sticking money in savings.
That is a lot of macro stuff hitting all at once. And isn't September usually bad for Bitcoin? Like Red September. Does that old pattern still mean anything these days?
Red September. Traditionally, yeah, you're right. Bitcoin prices often did dip in September. Earned it that nickname. But the last couple of years, 2023 and 2024, Bitcoin actually picked up steam in September.
Really? Why the change?
It's largely put down to the big players coming in. Trillion-dollar companies like BlackRock entering the space.
Ah, the institutional effect.
Exactly. They bring serious new money, legitimacy, a whole different class of investor. It just shows the power of that institutional involvement, how new money and new market structures can basically override those old seasonal trends. It's not just retail anymore. It's big finance.
Okay, so from the big global picture, let's zoom right in. Where is the big money actually moving within crypto right now? We heard about a huge announcement from Asia, potentially reshaping the institutional Bitcoin scene there.
Yeah, this is genuinely significant. Sora Ventures, announced at the Bitcoin Asia event, has launched Asia's first ever $1 billion Bitcoin treasury fund.
$1 billion. That's serious.
It is. They're kicking off with a $200 million commitment right away, and the goal is to get to $1 billion worth of Bitcoin within just 6 months.
Wow. And how's it different from, say, MicroStrategy just buying Bitcoin?
Good question. Unlike individual companies holding Bitcoin directly, this fund acts as a central pool of institutional capital. The idea is to consolidate Asia's efforts, which have been maybe a bit fragmented.
Makes sense.
It positions the region as a serious contender in institutional Bitcoin adoption, provides support for scaling globally. It really signals a new level of maturity, organization, a strategic long-term play from Asia.
Okay, that's a massive commitment. Shows growing appetite. But on the flip side, we're seeing some equally big shifts, maybe less positive. Something's happening with Coinbase and XRP.
Yes. This one's definitely a head-scratcher. Coinbase's XRP reserves, they've plunged over 80% in just the last 3 months.
80% from what to what?
From nearly $1 billion held across like 60 wallets down to just $165 million in only 10 wallets.
Okay, whoa. So what's going on there? Is it just weak demand for XRP, or is it something else, like institutions moving coins off the exchange?
That's the million-dollar question, isn't it? Is it weak demand, maybe still some fallout from the Ripple regulatory stuff? Or is it strategic? Maybe a move towards institutional self-custody.
So people taking their coins into their own wallets.
Could be. Some analysts see it as Coinbase or its clients basically backing away from XRP. Others argue it's just, wallet housekeeping for efficiency, or maybe institutions pulling assets out themselves.
But whatever the reason.
Whatever the reason, the news has definitely put pressure on XRP. It struggled to stay consistently over that $3 mark. Clearly impacts market perception, price stability.
Right. And sticking with exchanges for a moment, security is always a huge concern. We're hearing about a new partnership, boosting user protection.
Yes, LBank, the global exchange. They've partnered with CertiK Skynet.
CertiK, the auditing firm.
That's them. Skynet is their tool for real-time monitoring, finding vulnerabilities. So LBank is using it to seriously boost their security.
Okay. Is that common?
Actually, LBank is the first major centralized exchange, a CEX, to integrate Skynet like this. It's a big move for strengthening transparency and managing risk.
Especially given their reputation.
Yeah, they boast a 9-year record with 0 security incidents, which is impressive. And they're big in the meme coin space, which moves fast.
So this isn't just about better tech.
No, it's also about setting a standard, building trust, signaling they're prioritizing user protection in a pretty risky environment while still offering those fast listings and liquidity people want.
Okay, now for something, well, really controversial, something that hits at the core of crypto, the whole idea of decentralization.
The Justin Sun situation.
Yeah. Justin Sun, big name, major holder of this World Liberty Finance token, WLF. He's had his wallet blacklisted. It really makes you question that code is law idea we hear so much. If a smart contract can just blacklist someone, what does that mean for the whole immutable ledger thing?
That's an excellent point. It cuts right to the heart of blockchain's promise, doesn't it?
So what happened exactly?
So Justin Sun holds like nearly $700 million worth of this WLF token, and one specific wallet holding 595 million WLF tokens, reportedly worth an insane $107 billion, though that valuation might be debatable.
Wait, $107 billion in one token?
Reportedly, yeah. Seems high, but that's the number floating around. Anyway, that wallet got blacklisted.
Why?
It happened after some outbound transactions, including one for $9 million. Sun says they were just harmless tests. He's calling the freeze unfair, asking the team behind WLF to unlock his tokens.
A team? That sounds centralized.
Exactly. That's the profound question here. How can a supposedly decentralized asset be subject to a centralized decision like this?
So what does blacklisted actually mean? The tokens are gone.
No, the tokens are still in his wallet, but he can't use them. Can't spend, transfer, swap, redeem, nothing. Even if miners process a transaction, the smart contract itself is programmed to reject it.
Wow.
Just flies in the face of that fundamental principle of censorship resistance. And the WLF token, it dumped 20% in 24 hours after the news broke.
Yeah, no kidding.
It really makes you wonder, who is the team? And could this happen to other wallets? It shows that even in crypto, those old world problems like who really holds the keys, who controls the network, they just keep popping up.
Absolutely. And speaking of core principles, the promise of Web3 often includes better privacy, more control over your own data, things like decentralized identifiers, DIDs.
Right, the idea of owning your identity online.
Exactly. But when we look at the actual numbers, how are those doing? Are people really adopting these privacy solutions?
Well, if you look at the market caps for the top DADs,
Mm-hmm.
honestly, it's pretty disappointing compared to the grand vision.
How disappointing.
WorldCoin leads, but it's at $2.37 billion. Then Ethereum Name Service, ENS, at $749 million. After that, Mocha, Swap, Cyber, they're all much, much lower.
Not exactly mainstream numbers.
Not at all. For something supposedly so central to Web3's promise of privacy and user control, you'd think those numbers should be like 10 times higher to show real adoption.
So what does that suggest? People don't actually care that much about privacy.
It makes you wonder, right? Despite all the talk, do people genuinely prioritize these privacy protocols in practice? Or is there a gap? Our source suggests that maybe privacy protocols are often more of a marketing angle for founders trying to get funding.
Ouch.
Yeah. Especially when you see meme coins with way higher market caps and trading volumes right now. It highlights this clear disconnect between the perceived value or the ideal and what users are actually adopting or investing in.
So maybe privacy isn't the killer app yet. Could be usability, or maybe people just don't feel the need yet.
Could be all of those. Lack of perceived need, maybe ease of use issues, or maybe even the trade-offs with regulation and compliance. Complicated.
That's a pretty stark reality check on some Web3 ideals.
Yeah.
Okay, let's quickly zoom out again. Check the pulse of the broader market. Any notable shifts in DIGXs, total value locked, or RWAs?
Okay, quick stats. Global crypto market cap is sitting around $3.94 trillion.
Still substantial.
Oh, yeah. Now, DX volume, decentralized exchanges, still in the single digits globally, about $9.09 billion. Uniswap and PancakeSwap are neck and neck, leading with about $1.9 billion each. So they're still the main players there.
Okay. What about TVL, total value locked?
What's interesting there is that TVL has actually picked up. It's at $152.90 billion now.
What does that usually mean?
Usually it indicates people locking up assets to become validators, help secure protocols, suggest an underlying commitment to the network's health, which is good.
That's always a but.
Well, the but here is that transaction data on dApps, the actual usage, is surprisingly low.
So people are locking value, but not necessarily using the apps much.
Exactly. It suggests maybe a lot of passive staking rather than active engagement with dApp features. Could just be yield farming, not true utility yet for many.
Anything more positive?
Yes. Real-world assets, RWAs. The total value locked there keeps climbing. It's now over $15.27 billion.
Okay, that's significant growth. Bridging real assets to the blockchain.
Definitely. It shows real development and adoption in that specific area, even if overall crypto activity feels a bit stagnant in other ways. It's a concrete sign of traditional finance warming up.
And Bitcoin dominance. Ethereum.
Bitcoin dominance is holding strong at 56.30%. Ethereum's at 13.20%, which means there's still a pretty big chunk of the market, nearly 30% active in altcoins. So lots happening beyond the top two.
Okay, good overview. Finally, let's shift our focus geographically to the Middle East.
Ah, yes. Definitely a region making big moves.
Huge calculated strides, it seems, positioning itself as a major global hub. What's the latest out of Abu Dhabi? They seem to be really pushing hard to lead in crypto.
They absolutely are. It's a critical area for future growth. So GFOX, they're a new exchange and clearinghouse, just got principal approval from the SRA.
That's the regulator in Abu Dhabi Global Market, ADGM.
Exactly. Approval to operate as a recognized investment exchange and clearinghouse. This builds on what GFOX already did in the UK. They were the first FCA-authorized digital asset derivative MTF there.
So regulated derivatives trade.
Yep. And they specifically chose ADGM because they see it as a global leader in digital asset regulation. They like the progressive, institution-friendly framework.
What does this mean practically for institutions?
It means they can access GFOX's 24/7 trading and clearing across London, Hong Kong, and Abu Dhabi. And crucially, they can use digital assets as margin within a centrally cleared structure.
Why is that important?
It massively reduces counterparty risk, credit risk, makes big institutions much more comfortable getting involved, fosters larger adoption.
When are they launching?
Targeted for 2026. And significantly, they're backed by M&G Investments, big name. Their goal is clearly building that next-gen regulated market infrastructure.
Okay, so GFOX is setting up shop, but they're not alone, right? Another major player, QCP, is also digging deeper in Abu Dhabi.
That's right. QCP just secured its full financial services permission from the FSRA in ADGM.
Full license, so beyond principal approval.
Exactly. This really strengthens their presence across both Asian and Middle Eastern institutional markets. It builds on the license they already have from Singapore's MAS, the Monetary Authority of Singapore, another top-tier regulator.
So dual licensed in key hubs.
Precisely. It positions QCP as a super trusted partner, ensuring global coverage and really rigorous compliance across two highly respected jurisdictions.
What did QCP say about this?
Their CEO, Darius Sidge, called it a cornerstone of their global strategy. He specifically highlighted the Middle East as vital for the future of digital assets and praised ADGM's world-class framework.
And what does QCP actually do?
They were founded in 2017, offices in Singapore and now Abu Dhabi. They offer a seamless 247 platform focused entirely on institutional client spot and derivatives trading, market-making structured products.
So it sounds like Larry Fink's prediction might be coming true. Abu Dhabi becoming a world leader in crypto.
It certainly echoes that sentiment. They're not just following. They're actively building the regulatory and institutional infrastructure to lead.
Wow. What a deep dive into just, one single day in the crypto universe.
Amazing how much can happen.
We've covered everything from global economic summits, inflation data, billion-dollar Bitcoin funds, right down to those unsettling wallet blacklistings, and then this rapid strategic rise of Abu Dhabi.
Yeah.
It's just so clear the world of digital assets is constantly shifting, being pulled and pushed by this complex mix of finance, tech, and geopolitics.
Absolutely. And when you step back, look at the whole landscape from today's snapshot. You see these conflicting signals emerging, don't you?
Definitely. Like what?
Like really strong institutional adoption on one side, big money coming in, regulated players setting up shop. But on the other side, see this surprising lack of interest maybe in core principles like privacy protocol.
Right, the DIT number.
Exactly. And then fundamental challenges to decentralization itself, like that Justin Sun wallet freeze. These are all critical tensions shaping what comes next.
So given those conflicting signals, institutions jumping in while users maybe shrug at privacy, clear regulation emerging alongside these creeping centralization fears, these global economic tug-of-wars, what really drives the next wave for crypto?
That's the big question.
Is it regulation? Is it pure innovation? Or is it just the shifting sands of global power and influence? How much control do we really have over our digital assets when push comes to shove? And what does this week's news tell us about the future of, digital sovereignty in this increasingly connected but also kind of fractured world?
Yeah, something for you to definitely ponder.
Until next time.